Our next guest has won the LBMA forecasting prize 6 times, so naturally we have to have him on to know where the precious metals are headed. Phil Klapwijk is the Managing Director of Precious Metal Insights. He joins me today. Phil, good to have you back on the show.
Great to be here.
So 6 times, impressive.
Well, it may just be luck.
I don't think so. So let's start with your latest forecast. You won for platinum, I think it was last year, your
right,
forecast. Yes. So obviously post-Volkswagen scandal, how do you see the metal set up here?
Well, platinum was already pretty much down in the dumps before this VW scandal hit. I think in terms of demand there will be an effect from Volkswagen going forward. It's not just going to be company specific, and I don't think it's just going to be a flash in the pan. And the reason for that is the very high market share of diesel in Europe and the damage, I think, that will be done somewhat permanently to diesel's image in Europe as consumers basically focus on NOx and on particle emission from diesel cars, something that they haven't really been looking at in the past. They've really been focusing on improved fuel economy from diesels, and now they're looking at the sort of downside of diesel.
And what's your sentiment for gold?
Well, I think gold at the moment is looking very toppy. We had a good run up, failed to bust through $1,200 convincingly, and I think the next move is probably down now.
Really, to a certain range?
Well, I think it could be temporarily down a bit, but I think if we look forward to, say, 2016, the price will trend somewhat lower, and I mean well below 1100.
Well below 1100. It's funny, most people I've been speaking to here have been bearish on the metal, some calling for gold to even dip below 1,000. Do you think that could be a possibility next year?
I think that's probably unlikely because there will be sufficient support from the 2 key price-sensitive massive markets of India and China that will probably arrest, I think, a fall below 1,000. That doesn't mean we couldn't get a spike below, but I don't think we're going to trade for any extensive period below that sort of level.
So this recent momentum in the gold market didn't inspire you to revise that forecast?
No, not really, because I think if I look at the recent momentum in the gold market, a good part of it has been caused by short covering, by specs essentially covering their short positions on the futures exchange. A large part of it's been that. And it's also been caused by what I think is a temporary bear market in the US dollar. But I think the US dollar remains in a secular appreciation mode, and as we return to US dollar appreciation and we see some limited tightening from the Fed, this is going to spell lower gold prices.
But we have 2 important gift-giving events coming up, and the 2 most important, buyers of gold, China and India, Diwali in India, and obviously the Lunar New Year in China. Would that not help prices going forward?
Yes, I think they will, and it's one reason why I wouldn't be too pessimistic perhaps for price over the next 1 to 3 months. I think once we get Chinese New Year out of the way, though, 2016 could see gold trend markedly lower.
All right, so we covered the PGMs, gold. Thoughts on silver?
Well, silver's been a sterling performer, actually. Lately, of course, just the last few days, it's come off its highs, but the volatility in silver has been tremendous. But it does look to me as a metal where, if you're brave, you can trade a range quite successfully.
Phil, thanks so much for your thoughts today.
Pleasure, thank you.
And thank you for watching our coverage here from the LBMA in Vienna. We'll have more for you. Stay tuned.